Good morning, everyone. This is daily trading analysis with the market forecast for today, 18th of October, Tuesday, second day of the week, and possibly looking for continuation on the Nasdaq and the equities market from yesterday. So right now, Nasdaq is super strong on overnight in pre-market, already 2% in the green. As we can see right now, we have a nice big channel since Thursday last week from CPI data flash, then the recovery. Then we have Friday doing also a dip, and yesterday we got a nice overnight longs consolidation, and now we are breaking up, breaking also last week high 11,255, and we are right now quite well holding this level in 11,350, this area in which we had some resistance, we broke support and then resistance. So right now we are basically at a resistance level. We have to be patient here. We have a lot of key levels in here. Apart from this breakout spot, we are holding pre-market lows. We are holding, very interesting, this last week high blue dot line at 11,253. So basically, we are quite strong again. Yesterday we had a lot of longs. This night we have also a lot of longs. We are triple topping this 11,350. So be careful, because there will be a lot of opportunities to go bullish on the day on the Nasdaq for sure. We have I think we have at least this near-term objective of 11,500 if we break this area of resistance. And to the downside, don't forget that we are quite extended. We can see a pullback. Hopefully, we can hold 11,250 last week high. And if we do that, we are basically pulling back. We are basically pulling back off support and then breaking up. So we can see big moves today, at least to the upside. To the downside, we might be looking for sure, something like a rejection from the highs. Again, rejection of last week low and seeing at least pre-market low. So for this bear case, we can see some stairs stepping down, lower lows, lower highs, and perhaps we can see 11,000 again. That would be a nice pullback from these levels. We are basically breaking out this trend line to the downside. This descending resistance, we are pushing, we are quite bullish, but we have to be prepared also for the bears, for the short sellers to appear at this level. Remember, patience. We need to be patient. We need to be disciplined to wait for our opportunities. And right now, we are quite extended dealing with this resistance. Apart from that, FTSE, UK markets are holding this support. This is quite good for the overall market because UK is strongly pushing up. We are still not doing higher highs, about 7,000, but for sure, we'll keeping an eye on this daily. We are double bottoming, and at least we are far from the danger. The dangerous position we had last week was to break down this support, and now I think we are safe. We are starting to see a strong move to the upside. We would like to see consolidation in here for the breakout. That would be quite nice to see. Yields, high yield corporate bonds still going up right now in pre-market, almost 1%. We are in the middle of the range. We need to see 73. We are right now 72.90. In pre-market, there's usually not a lot of activity in these high yield corporates, but we are gapping up. So hopefully we can clear this 73 and move higher. The rest, inverted yield curve, it's pushing from support, this double bottom, also key level. I have an alarm here around minus 0.3%. Remember, for this inverted curve, this is the 10-year minus the 2-year. We need to see 0. This inverted curve here means that we are in a recession. We are below 0%. So 2-year yields are way higher than the 10-year yields. 10-year yields is right now almost swiping 4%. It's holding 4%. We are making higher lows with a flat top. And we are quite strong up here. The 10-year is quite strong. The 2-year is almost consolidating below 4.5%. And that means that we are expecting high interest rates. Right now, still almost 90+% of analysts expect a 75 basic points. That means 0.75% of interest rate hike. And we're expecting for this December, we are expecting 4.2% of interest. For April next year, we were at 5 almost. So we are expecting right now, April next year, to have 5% of interest rates. That's crazy high interest rates. Regular people that is not in this world of macroeconomic events, news, trading, markets, they don't even know what is coming. We are ready. We should be grateful that we are dealing with this market and we are trading, we are in this market, knowing that next year is going to be painful. We have a great advantage that regular people don't have. So we can prepare for the future. And right now, next year is going to be painful. And we can prepare for that. Not only for trading, but also for our families and our personal income and economy, household economy. After April, still at September, rates don't go lower than 4.8. So there's going to be at least 6 months at almost 5% of interest rates. That's crazy. And again, regular people out there, they don't even know what's coming. And we have to be prepared for that. Dollar, 2 hour, we're still waiting for this to break down this 112. We have two market structures in blue holding support, but we are stair stepping down. I want to see dollar below 111. That is key for our earnings, this week's earnings. That a strong dollar would impact negatively in the earnings. So we need a weak dollar ahead of the earnings this week and next week. This week, today we are dealing with Netflix and also Goldman Sachs. So we will see. Netflix is after market closes. Goldman Sachs, I think it's before market open. So let's going to see. It's not out yet, but it's gapping up. So strong gap up from Goldman Sachs. And also financial is also 2% up in the green, along with energy, technology, and utilities. So let's go to staples and utilities. Utilities are pushing up. That means we are going into the utility sector. That means that money is flowing on these utilities. That means we can be bullish. Here in consumer discretionary versus staples. This is a ratio, a very important ratio that shows that money is again flowing into retail, into consumer discretionaries, and we can see more risk appetite from the investors. And this means that markets usually move up. So this is a great ratio. We are gapping up also 1%. I would like to see at least 2, and we have an alarm set at 218. Energy, it's also quite strong, but not for crude oil, that is basically flat. We are waiting for this resolution to the downside. We are waiting crude oil to go below $85 per barrel. And I think we can see it now this week. We can see it this week below this 85. Natural gas, after yesterday's sell-off, we are bouncing off 6. Basically, we are finding support of 6. That is to be expected. So a little bit of pullback of bounce here, but I expect natural gas to establish market structure here, consolidating or perhaps going lower to 550, in which I think we are going to find a lot of demand. So that's for energy stocks. Again, coming back to the Nasdaq, we are still here at resistance. Be careful. Don't be impatient. Be patient. Be disciplined. We are quite stagnant. The best case, I think, in my opinion, should be to wait for this level to clear, or maybe a bounce of a key level last week high for a move higher. We have quite clear targets, 11,500, and we are basically seeing green across the board for Apple. It's gapping up, Microsoft, Amazon almost 3%. We are moving higher as yesterday, but expect some kind of pullbacks. Expect sellers to come in, supply to come in. In Tesla, we are seeing, yesterday we saw 7% in the green. Right now it's 3.7% ahead of earnings this week. So super strong Tesla. Google almost 2.8% in the green. Nvidia 3%. We are seeing strong demand of these stocks. So Nasdaq, ES are quite bullish. But don't be fooled. We've seen last week a lot of crazy volatility. So expect the unexpected. We saw on Friday a big push and then a quick sell-off. And this kind of market profile means longs liquidation. Regarding that, let me take a look to the economic data for today. So basically right now, 15 minutes before the open, we have industrial production and manufacturing production. So that would mean a little bit of information for the production. And apart from that, nothing else for today. We are waiting for Wednesday for inflation rate for Europe zone and housing starts and building permits. Let me take a look to the open interest for futures. For S&P 500, we have positive 9,000. That's good for the upside action to the upside. And for Nasdaq, unfortunately, we had 6,000 in the negative, in the red. So what happened? What happened? If we take a look to this, to the market profile yesterday, we can see that this is a P shape. P shapes, same as B shapes. B shapes are long liquidations and P shapes are short covering. So after this consolidation and this move up, I think, in my opinion, the negative open interest in the Nasdaq means short covering. So we are getting out of positions. A lot of people is getting out of shorts from Friday perhaps, and we might see new business to the upside. Right now, as you can see, we are seeing a breakout and we are quite strong today. We are seeing the breakout of 11,350. That's a key level. And we hope that into the open, this level holds. If this level holds and also last week high holds, this dotted blue line, we can see continuation to the upside for 11,500 or 11,600. And I think that's all. As always, thank you for your time. If you have any questions, you can comment down below and I will try to respond to all of you. If you found this video useful, please remember to click the like button and subscribe to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recap. I appreciate your time and see you in a couple of hours with the market update. Remember, we are starting the day. Discipline, patience, and risk management are key for success. Stay safe, everyone.